we're going to see a very expected rate hike here. I mean, so they're going to announce that they did it. We're going to look very closely at the language in the report, and we're going to listen very closely, as they interview and figure out what Jay Powell was trying to say. But so this is telling us that the economic expansion is intact. I had Dr. Jeff Lacker on my podcast last night. The Farr cast is what we call it, Brian. And he's former president of the Richmond Federal Reserve. He says, yes, 4 more hikes. Yes, he thinks you could have 6 to 7, maybe even 8 to 9. He's very hawkish. And that was big news out of Lacker. You know, he hadn't been out a full year yet, so he knows those personalities. That can take those Fed fund rates up to 3.5%. He doesn't think that would be out of the realm at all.
I heard your podcast was far out, but maybe that name was taken. Either way, okay, so what would be the best case scenario then from the Fed today? A rate hike and then muted conversation about inflation, or what?
Yeah, I think to say, well, one of the things that I think you'll see go is the language about, that policy is still very accommodative. That language just is too dated now. They've raised rates too many times. When they're raising rates, they're not accommodating, right? So that language will probably go. I don't look for any other really major changes. So the less the Fed does, the more they stay out of the way, the more they stay a non-news issue in this kind of a cycle is good, because the economic data continue to come in very strong, right? I mean, the unemployment is very, very low. The growth numbers are high. GDP is good. I continue to worry about the debt. But, Jim Muriel was on the Farcast last night, and he continues to say, by the way, he loves you. He says, I love Sully. You're doing Sully. I love Sully.
He's a smart guy.
He is a smart guy. But he continues to say we're going to see this really melt up of stock prices that should not be hampered through year end. So it does look like this bull market's intact, though. I would suggest that investors not take a big lead when they're on third base, right? I mean, as your stock values go up, keep to your allocations, keep trimming those positions. This market is still very high.